Hey everyone. So, for those of you who are new here, my name is Bailey Darling, and I'm the founder of Money Mindset. And you're getting this free comprehensive credit card training module today because you took my credit card quiz, and that's just awesome. Now, in the quiz, I gave you some specific criteria on what to look for when you're applying for a credit card. And I also gave you a specific recommendation on which card would be best suited for you based on your personal spending habits. Now, I probably could have left it at that, and it would have been good for most people. But once you get to know me, you'll realize that my ultimate goal is to get you to take action. And realistically, if I don't do that today, then to me, I've kind of failed. So, what exactly is in this lesson? Now, the very first thing I'm going to do for you is give you a quick checklist, of exactly how to apply for your new card, primarily online. And this is literally going to take maybe 5 or 6 minutes. It is so simple and so fast. We'll also be going over a step-by-step walkthrough on how to get that card shipped to your door. And just really quickly, while I was making this training, I thought to myself, what use is it if I help you to get a credit card and I don't teach you how to use it, right? And that right there is the main thing we're going to be learning today. Exactly how to use your card to get the highest credit score possible in the shortest amount of time. And we're also going to be going over the immense importance of doing that and doing it right now. Finally, I'm going to be going over the top 5 factors that make up your credit score, how much each of them are worth in terms of importance, and exactly how to tackle each one of them. But before I do that, I need to make sure that you understand one thing, and that is the immense power that your credit score will actually have on your entire life and the extreme importance of getting started right now, today. The biggest reason why I'm imploring you to get a credit card and start building credit is because your credit score, if it's good, can save you an insane amount of money in the future. And unfortunately, if it's bad, it's going to cost you equally as much. For those of you that don't know, your credit score is a number between 350 and 850 that determines quite a lot of things. Primarily, it's going to determine interest rate on loans that you get in the future. And obviously, the higher your score is, the lower your interest rate is going to be. But it also determines a lot of other things like insurance premiums. You can often get better terms on cable and internet, and just overall better financial deals throughout your lifetime. So let's take a quick look at an example that will hopefully get you convinced. Okay, I'm going to go through this a little fast because I want to get to the important stuff. Now, in scenario 1, let's say you follow this credit card training and you get a credit card right now. You build credit for the next 3 to 4 years while you're still in university, and when you exit university, you have a score of 740, which is really not so unattainable considering I've only had a card for about 3 years. I'm in my third year of university, and I have a score of just a few points shy of that 740. Let's say you're going to go buy a house, but you need a loan. So you go to the bank and ask for a $300,000 loan for your mortgage. Since you have a good credit score, the bank gives you a nice low interest rate of 4%. And this is essentially the rate you pay to the bank every single month for essentially borrowing their money. And at this rate, over the life of the loan, which is going to be 30 years, you are going to pay a total of $515,609. That's pretty average, and while it may seem like a lot of money, that interest rate is relatively low, and it's all because you had a good credit score. But let's say you don't get a credit card right now, and you wait until you're out of college, which is what a lot of people do. You'll have maybe 1 to 2 years to build your credit, right? Which isn't great because a big part of your credit score is based on how long you've actually had your card. So your credit score now after 1 or 2 years is, let's say, 550, and you head on over to the bank and you ask for that same $300,000 loan. Only this time, they give you an interest rate of 6.5%, which is, only 2.5% higher. So really not so bad, right? Well, this next part surprises a lot of people. Just because of a tiny 2.5% increase in your interest rate, the total amount you are going to pay over the life of the loan is $682,633. Plain and simple, if you don't start building credit right now, it is going to cost you hundreds of thousands of dollars. And this was just one example. Now, comparing this to scenario one, you're paying an extra $167,000 just about. And that's just for a tiny 2.5% increase in an interest rate that was all determined by your credit score. Now, I hope most of you know by now my philosophy of big wins. And if you don't, it is really simple. I really don't believe in lecturing you about penny pinching or scouring the internet for 10% coupons or cutting back on Starbucks mochachinos or whatever you might like. Instead, I want you to focus on a few huge successes that are going to make a monumental difference in your life. And this is one of them. One, because it is so simple for you to apply for a card and build credit. And two, well, because $167,000 is more than a full year's salary for most people. And that, remember, is all because of a minimal change in interest rates. But maybe that's just me nerding out, and I'm probably getting a little off track at this point. But regardless, that is something I call a big win, and something you're going to realize that I focus on all the time. And by teaching you just a few more of these quote unquote big wins, you are going to be able to spend on things that you truly enjoy, like maybe it is mochachinos or a new pair of shoes or just a fun night out. And you're going to be able to do that completely guilt-free. And this is because you know how much money you're saving in the long run. All right, now it's time for a quick walkthrough of the step-by-step path you need to take in order to get that card shipped to you. If you already have a credit card and you just need to know how to use it, then jump on over to the next section. But before you start, make sure you have your social security or social insurance number handy, depending on where you are, as well as your gross annual income. Now, the neat part about this is that you're allowed to count not only your personal income towards this, but allowances and gifts, grants and scholarships, trust fund distributions, retirement income, and social security income, which isn't going to be too applicable to this age group. But the important thing is this will make your income higher. And the higher your income, the better, because it shows credit card companies that you're more likely to pay off the debt that you incur on your credit card. So let's get right into it. Here's what you do. You go to the website. For this example, I'm going to be applying for a card on Capital One, CapitalOne.ca. So you choose the card that is right for you, and I want you to refer back to the criteria you got in an email after you took the quiz. Now find a card that suits that criteria, or go off of my specific recommendation and pretty simply just hit apply. So for me, in this example, I am choosing a card with some awesome air miles bonuses because I often fly from the US to Canada and vice versa. Next, you're going to be presented with the terms and conditions page. And here are the three big things to watch out for, okay? One is going to be annual fee, because for me, I really don't like annual fees because I don't spend enough to make it worth $50 or $100 per year, just to have the card. The second thing to watch out for is something called grace periods. And this means you are entitled to a certain amount of days between the time you receive your credit card bill and the time you have to pay it off. Finally, it is always thsmart to check the section titled Other Fees. And this is because there's sometimes simply some nasty hidden charges there. So run through those three things really quickly as you fill out your application. Finally, you get to the personal info section, employment information, and financial information. And again, remember, you are going to be putting your annual income, but this isn't just employment income. Let's say I made $10,000 this year, but I got a $4,000 scholarship. This counts too, so I would put $14,000. After that, you review your application, you submit it, and you're either approved on the spot based on their algorithms, or if they check it manually, you'll be approved in a few days. Now, this process is so unbelievably easy and will literally take you 5 minutes. So absolutely no excuses. So how do you actually use this card? Now, let's get into exactly how you're going to use this, shiny new card that you have in your wallet right now, or hopefully in the mail on its way to you. But before we start, I just know that a lot of the jargon on your credit card statement is going to be confusing and it's going to be complicated, but follow these steps and we're going to focus on just the important things so you know the essentials. Your credit score is made up of 5 key factors, and by focusing on each of these individually, you can ensure that you get the highest credit score possible in the shortest amount of time, with relatively little effort, in all honesty. So, to give you some context, I have 3 credit cards right now. I have a score of just under 740, as I mentioned earlier, and I got my first card about 3 years ago. All right, the very first factor that determines your credit score is payment history. And this is the biggest part because it's worth 35% of your entire score. So if you do nothing else, it is absolutely imperative that you pay back the full amount on your card every single month. Let's say you pay just the minimum balance. Your score won't decrease per se, but man, you are going to pay for it, literally and figuratively. And this is because you are going to get hit with so many recurring interest charges that it will take so much longer to pay off that you literally become a cash cow for these credit card companies. And that's not something either of us want. When you pay just the minimum fee, that's when you get charged these interest payments, right? However, if you pay back the full amount every single month, you will literally never get charged any interest payments. And you don't even need to worry about that thing called APR, which is essentially the percent you're going to pay. This is normally around 20%, but if you pay the full balance off every single month, you don't even need to worry about it. So to reiterate, pay that card up every single month in full. And this next part of the process is going to help you do it, and it is so important. And that is to set up auto payments. I recently wrote an article on why I haven't used my debit card in 3 years, quote unquote. And it's simply because I set up auto payments, right? I use my credit card exactly like a debit card. The only difference is I'm reaping rewards like cashback or air miles or rewards on gas or a bunch of other things. And at the end of every single month, the full amount is automatically withdrawn from my checking account and automatically paid to my various cards. It is so simple, and it's exactly like having a debit card. But the difference is you're able to reap some pretty sweet rewards, and you're building your credit simultaneously, which is a huge win-win. Now, the next factor is called utilization rate. And this is essentially how much you spend on your card, also called debt outstanding, divided by the total amount of your credit limit. In other words, it's the percentage of a borrower's total available credit that is currently being used. So let's say that you have a credit limit of, let's just say $1,000. Now, let's say you spend $500 of that in 1 month. Your utilization rate is at 50%. Your goal, however, should be to keep that number below 10%. So if you spend $1,000, if you have $1,000 credit limit, I want you to spend less than $100 of that, $100 or less. But that being said, you do need to spend a little bit of money every single month, because if you go too many months without using your credit card, it could become deactivated, and this really hurts your score. The next factor we have to keep in mind is called length of credit history. And I mentioned this earlier. And this right here, folks, is the biggest reason that you need to get a credit card right now if you haven't already. Lenders like to see that you're responsible over a long period of time. And your credit score takes a very long time to build. I'm talking years. Another thing that you need to keep in mind is a missed payment will stay on your credit score for an extremely long time as well. 7 years. That means for the next 7 years, if you miss a payment, you just decrease the prospect of getting a loan, a lease, car insurance, and you increase your interest rates on every single one of the above. Just because you missed one payment, right? It's insane. This reason is once again why it is absolutely imperative for you to set up auto payments. Take the stress of remembering off of your plate and automate your entire financial life. I live completely stress-free and really don't have to worry about my financials because absolutely everything is automated. I set up systems to do the work for me. So you set up auto payments through your credit card provider, not your bank. However, you will need your banking information like routing number. So just go to your credit card provider website, maybe it's Capital One, and find set up auto payments. And if you can't find this button, just keyword auto payments in the search bar and it will come up. But let's say you still need a little bit more help. just give them a call and say, I would like to set up auto payments. And boom, approximately, 3 to 4 minutes later, you're good to go. This is also worth 15%, so very important. Now, getting back to it, download the company app. And this is because you'll get notifications about ATM fees, missed payments, possible fraud, and it's also really important to check up on your credit score. Now, the next factor we're going to go over is called credit mix. And this is the variety this is the variety of credit or debt that you have. And it's worth 10%. So types of debt include things like student loans, car loans, mortgages, student lines of credit, and much more. So if you have, let's say, 3 credit cards and you use them solely to build credit, that is awesome. But your credit mix is 100% made up of credit cards. But let's say you have a student loan, 2 credit cards, and a car loan, right? Then your credit mix is very good. And honestly, don't go overboard with this one here. Just have, if you can, 2 types of credit. That will probably suffice. And this factor is weighted at 10%, as I said. So it's not a huge worry. If you don't need to take out a student loan, then don't do it just to make sure you have a good credit mix. There's no need to overdo it. Just something to keep in mind. All right, the final factor we're getting into is called new credit, and it is worth 10%. So let's say I apply for a credit card. This is new credit, right? Because I just applied for it. Or maybe I'm applying for a student loan. This is also new credit. Every time you apply for a loan or a credit card or a line of credit or something like that from a big financial institution, you're doing something called an inquiry. Something called an inquiry will show up on your report, on your credit report. And this is essentially one lender asking another financial institution, like let's say Credit Karma or FICO, what your credit score is. And they do this to see if they are going to be willing to lend you money and at what percent they should lend it to you at based on your credit score. So the lower your credit score, the more of a risk that there is going to be that you won't pay back that debt. Thus, they're going to give you a high interest rate or not give you that loan at all. But if your score is good, they will give you the loan at a much lower interest rate because you have a good, solid credit history of paying everything back on time. Now, when a big financial institution like the ones I mentioned inquire about your score, it is called a hard inquiry. However, if you want to know what your credit score is and you head on over to FICO.com and their website, or really whoever your provider is, to check out what your credit score is, that is called a soft inquiry. And only hard inquiries will affect your credit score, not soft inquiries. You can check 2 times per day or 5 times per day, and your credit score won't change because that's a soft inquiry. So if you apply for, let's say, 3 credit cards and 2 student loans within a 6-month period, your score is most certainly going to decrease. And this is because you're getting all of these loans within a short period of time. And that's seen as really risky by credit bureaus or people who are lending you money. So best advice is to space out your applications when you apply for credit. I currently have 3 credit cards, right, as I mentioned, and I spaced out my applications over, it was, I think, 4 or 5 months, keeping in mind that I was applying for student loans every September, right? So it doesn't just count when you apply for a credit card. It accounts for any line of credit or any money you're borrowing. All right, well, let's do a quick recap. So 1, you get that credit card in the mail and get it now. It's extremely important. The second most important thing is to remember, set up auto payments before you do anything else, right as that card arrives. 3 is to keep a low utilization rate, but still use your card every month because you can't have consecutive months where you spend $0. Number 4 is to, if you can, build a variety of credit, but remember, don't go overboard with this. 5, honestly, slow and steady wins the race, so be patient because building credit takes a lot of time. And also remember that one small mistake is going to last a really, really long time on your credit score. Another thing is, don't do it all at once. If you're going to apply for a credit card or a student loan or a line of credit, space those applications out over a few months. Don't do it all at once. Finally, if you're still confused, honestly, shoot me an email, check out my blog, download one of the guides, right? Remember that my ultimate goal is to get you to take action and honestly just help you every step of the way. And I'm willing to put in copious amounts of time on email to do that. Now, Before you go, I want to leave you with one last thing that could quite possibly make an even bigger difference than what you just learned. This next thing I'm going to tell you made me over $850 in just a few months of really doing absolutely nothing. And it also put me on track to make, I know it may sound unrealistic, but extremely modestly, 1.7 million by the time I retire. But I know that's a long way away, and I want you to know that the biggest weapon that me and you have is time. And what I'm going to show you soon takes almost no time to set up. It takes extremely little effort to maintain. And I guess you're probably wondering, why is that? And it's because we're going to automate the entire process together, right? You should get by now that I'm totally into the process of automating systems and setting those up to do the work for you. Now, it's really important to remember that this isn't a get-rich-quick scheme in any way, trust me. It's more of a get-rich really slowly and realistically scheme, is what I'd like to call it. So, take the time to head on over to your email, where I've sent you a special little gift that I know, without a doubt, will make you financially free and have you living with no debt and be able to live a financially independent and really stress-free life, because that's the ultimate goal here. So, again, thank you so much for listening, and I truly hope this helped you. And if it did, and you can think of someone who could use something like this, send them the link to the quiz. And it's really important that they take the quiz first. Otherwise, they won't be able to get any helpful emails, and they won't get access to this free training once the link is taken down. So, thank you so much again, and I'll see you all next time.